A lot of this is related to the leverage markets that John just hit on. And so at least half the questions we get from people are around what's going on in the leverage markets. And so it's good to hear, John, that you guys are open for business and looking at opportunities. This first slide won't hit too hard. I think most people understand that what is going on in the market with RPKs, dropping precipitously. I think Greg, you were talking about, and John talking about, hard to call the bottom. What is interesting here is you'll see some of the aftermarket financial results, on a sales basis on the MRO side in the last cycle, and you can see how long it took for these aftermarket businesses to recover. If you flip to the next page, it's a little bit more of a granular look at stock prices and how they've moved in looking at three different categories: OEMs, supporters on the engine side, components, as well as MROs. And what you'll see on the top chart, which looks over multi-year, is a strong increase in all of those indices. And then a pretty precipitous drop. I think what you're seeing right now in some of the recovery from just a multiple standpoint, this is all with comps, from a multiple standpoint, you are seeing the fact that earnings have dropped and the market is still, I think, pricing in an eventual return, right, and not being quite as pessimistic as maybe some of the phone are, or at least as pessimistic as some of the CEOs that we've talked to are at least privately, as they plan for downside scenarios. Look to the next page, and this is where maybe a little bit more interested in not just data thrown at you guys, but rather some observations that we're seeing. So certainly echo what John said about, look, commercial aero is a little bit tough right now, and I think what we are seeing is that even those industry specialists, so in dedicated funds on the private equity side, or strategics, a little bit hesitant to call the bottom, or to at least make a prediction on RPKs, production rates, and all that sort of thing. And that's hard when you have some of the more some of the smarter money at putting pause on new investments. In general, M&A had been, on the OEM side, had been a little bit muted going into COVID, primarily due to the 737 uncertainty, as well as some of the body production issues. We were already in a softening M&A market on the OEM side, and then COVID turned out to be really a backbreaker. With Hexcel and Woodward, that deal being called off is probably one of the most visible casualties. Switching to our private clients and companies, we'd say that almost every, John, you probably saw this, and it's because at least this, but every one of our commercial aero clients quickly liquidity. That was taking the max on the on revolvers and existing lines of credit to draw down to make sure that they could weather the storm. And I think at least in the medium term, in the near term to the medium term, that liquidity remains pretty good among a lot of these businesses that are very impacted. And so I think right now, if you were to do a poll of private equity backed sponsor or private equity backed commercial aero businesses, as well as some of the public companies that you can go look at, they have good liquidity, and will have good liquidity for another couple of months. And so, but kind of coming into the fall is where things are going to get more challenging for them, as well as for their lenders. If we talk about bright spots, there's certainly certainly on the, I'll call it commercial. It's not what a lot of people talk about commercial, but cargo remains a very bright spot. You're seeing increase in dedicated cargo demand, partially because we're all buying everything online through Amazon, and partially because with reduced passenger traffic, you don't have that belly capacity anymore. So cargo certainly represents a bright spot, and defense represents a bright spot, as well. As we look at different deals that could make sense in this environment, we have certainly discussed cashless mergers with a number of participants in the space. And the idea being, company A's been, aftermarket company has been crushed with the downturn in miles flown. Company B has been crushed too, so at least getting to a relative value is a little bit easier than trying to do a cash transaction where you're debating whether 2019 is the right metric to look at or 2020. So we think there could be some increased merger activity as people try to bulk up on scale, save, create some more operating leverage, and protect liquidity. On the public side, we're seeing quite a bit of interest in pipes, more specifically converts. And in that case, like a convert can be a pretty interesting instrument, since it allows the issuer to issue essentially debt now with a pretty high convert price that they believe more accurately reflects the long-term equity value, and the investor gets that same gets that downside protection. So we're seeing that momentum in the converts market pick up pretty considerably, and that's outside of aerospace and even outside defense, but really across the markets. If you look back to the last downturn, I think there was this sense coming out of 08, 09 that the only thing that was going to ever grow again was the government. Like now, we were shoveling money into government programs. So there is, back then there was a huge increased interest in mil aerospace and just defense exposure in general. And you saw companies make some pretty strong M&A moves into the defense side, and that made a lot of sense. At the time, it was kind of the conventional wisdom, made sense, right up until it stopped making as much sense. And that's as the economy recovered, commercial demand picked up again, and then simultaneously, after shoveling money into the economy, the government started looking at cutting costs and a little bit of fiscal responsibility with sequester, et cetera. So long way of saying is that I think that there will probably be a pivot to defense in the near to medium term. I think that right now neither party is going to be eager to remove dollars from the system, from the defense markets. So what I would anticipate is that regardless of who wins in November, dollars keep getting spent. But I do think around 2023, 2024, the next presidential election, we'll have had an increase in commercial demand. We've had a pretty full recovery there at that point. And as a result, in the general economic recovery, you'll have politicians looking at defense cuts. So long way of saying, I think military is good for the kind of the near to medium term. I would sort of be careful about what's going forward, kind of past 2024. And then finally, I think what we're seeing on the general aviation side is that there's a hope that will rebound faster than commercial. I think commercial is just a big question mark, and you can certainly make a case that GA business aviation could even emerge a little bit stronger post COVID. So that would welcome any questions in the Q&A session. Can be a little bit more specific, and feel free to follow up with me offline as well.